Good evening, it's Doc Severson for the TheoTrade report for Tuesday, April 24th. I'll start out tonight with a chart of the S&P 500 futures, and we can see that today we've had about a 72-point range from pre-market in the European session all the way down to the lows of this afternoon. We've got about 30 minutes left to trade in today's session, so I guess the first question is, what happened today? Number one. Number two, who's responsible for this? And then number three, where's this going from here? All right, as far as who's responsible for this, I think there was a few catalysts this morning with an overall nervous market. Remember that last week's rally was very low volume, and we got over some very important levels but are unable to hold them. And so this morning we had things like 3M announcing earnings, and they just got absolutely destroyed. Going from 216 down to about, under $200, and right now trying to hold that $200 level. So not a good performance. And one of the most dramatic ones that we saw today was Caterpillar. Now, Caterpillar did announce earnings overnight, right? And so they bounced up from about 154 up to 161. Everything's good. And then I don't know what happened on the conference call. So there's the conference call that happened this morning, and everything started to fall apart right at that point. So, of course, Caterpillar is a huge weighting for the Dow and was really a huge drag on the Dow all of today. Now, what's precipitated a lot of this is a few days ago, one of Apple's suppliers actually had some very weak forward guidance. And so that sort of leads one to believe that Apple's iPhone sales are going to be very weak when they release their earnings. Now, Apple's coming up next week as far as their earnings, but they've already started to print a lower high. So we've had a change in polarity to now a downtrend on the daily chart for Apple. And if we look at our combination ticker here for Facebook, Apple, Microsoft, Google, Amazon, we also show a lower high but not a lower low. So we don't have a full downtrend yet. One that I should mention for last night was Google. So even last night after good earnings and popping up about $50 after market, right at the closing bell, it's been very soft ever since. So we're down 50 net from yesterday's close. So of course, another factor that's driving markets in indecision and uncertainty right now has been, of course, the 10-year note. Interest rates are perhaps going higher. Now, the next Fed meeting is next week. It's very unlikely they're going to do anything to the Fed rates, but you never know what the statement's going to hold. Now, no conference next week, just a statement. So that's, of course, going to be picked through with a fine-tooth comb to see if there's any foreshadowing for the June meeting. So right now, this 3% rate is almost like a third rail of the markets. The equity market does not want to see rates rising right now because everything has been built based on ZIRP, or 0% interest rates, or very low interest rates right now. So right now the equity markets don't know how to handle this new paradigm of rising rates. Okay, so let's bring this back to the S&P 500 and finish out today by talking about what's going to happen next. To answer that, we need to look at where we've come from, what we're doing right now, and where we're potentially going. So anytime that we have a market doing something like this, where we have this parabolic move into January, that is unsustainable. We all knew that at the time. It's just a question of when you get into a FOMO market, fear of missing out like this, when you get into that parabolic tail, that's when most of the gains come. And you can see that that monthly candle was the largest one that we had through this whole run. Okay, so finally that's over, and now, as they say, from a parabolic move like this, you're going to have a hairy back, and that's exactly what this one has done. Actually, if you step back from this, this is doing exactly what it needs to do. So the big question is, now that we know, yes, we've known this for a while, that we're into sideways and volatile character of the market. We went from quiet and trending into sideways and volatile character. And this is precisely what we should expect to see. We should expect to see days like today where we drop, in this case, now down 45 handles with about 25 minutes left to go. So we know that one of two things is going to happen from this sideways and volatile character. We're either going to see this, and this is very similar to what we've seen in the past through like 2011. We've seen this 2015, 2016. We've seen the same type of corrective behavior. And we know how those resolved. Those ended up resolving to the upside with another quiet and trending market swing. I should also mention that both of these left these patterns under extremely dicey circumstances where it looked like it was all but over for the market. It looked like it was all but over for the market until the Brexit came along. In 2016, it looked like we were printing a very nasty lower high and about to roll over. In 2011, it looked like it was all over for the market until we started to get into 2012, and actually 2012, just when it looked darkest, when we had things like the sequester and the fiscal cliff, the market rallied like crazy. We had a record year nearly in 2013. So don't discount any possibility for this. But let's bring up the third possibility, which is that from a sideways and volatile character, we throw off a lower high and then we start to roll over. And that's the second possibility, obviously. So what we have to watch for here is right now we're just building a triangle. We're just building a triangle, and this is just vectoring in. And today's move is nothing out of the ordinary. This is even not changing polarity. So even from the higher high, this is merely another higher low. As is this, as is this. All of these are just higher lows. So what we have to watch for here is really come down to this. We can just box this area in. And if we end up putting in a lower high and a lower low that undercuts not only the April low, but also especially the February low, then chances are really improved that we're going to run into something like this back in 2007. Now, does that mean a full bear? I don't know. And we're not here to predict the future. We're just here to set up framework to allow us to know how to trade the next character of this. By the same token, if we start to see this scary higher low, this is what I call these, a scary higher low, everybody panics and freaks out. And, you know, you see Jim Cramer show up on the Today Show, and all of these, you know, they almost show up like clockwork. If we end up breaking above this level, then it's very, very likely that we're going to move back into a quiet and trending mood again. Now, I know that after a day like today, that does not seem possible. It doesn't seem within the realm of believability right now, but we've seen these types of moves so many times that just when it looks like it's darkest, this is where we see a type of slingshot move. Now, think about some of the catalysts that we have. We have Facebook coming up tomorrow, although I don't think anybody expects a whole lot from Facebook based on the the last few weeks of PR disaster that they've had. We also have Amazon coming up on Thursday. So Facebook tomorrow after market, Amazon Thursday after market. We've already talked about Apple and probably how soft those numbers are going to be, but that's already priced into the pie right now. That's already, we've already priced to perfection Apple at this point. So what I would encourage you to do is to get out that weekly chart, go back and look at some of the things that occurred back in 2007. So 2007, you can see how the market started to get, even from a very quiet beginning in the summer of 2007, all of a sudden it got very, very noisy. The first shot over the bow, we rallied into a new high. And that gave got everybody on the wrong side of the boat at that point. And then from there, lower highs and lower lows kept showing up. And this was actually a monthly lower high, and that's a very, very dangerous signal. Anytime we put in a monthly lower high, but notice how long that it took to set up. And this is why I suggest to people that want to short this market, people that want to grab this thing by both hands and short the daylights out of it, is like you'll have time. You'll have time to do that on the monthly lower high, and you won't lose that much because most of the selling, if this truly runs into a bear, will occur near the end. So that's kind of the longer term view right now, trying to figure out whether this is going to resolve to the upside or start to crater to the downside. There is a little bit of a look of a a descending triangle to this, and we're also seeing something similar on the Qs. The Qs are actually setting up a head and shoulders pattern. How about this? Left shoulder, head pattern, right shoulder, setting up kind of an odd looking neckline. These are always very subjective. But what I'm hoping is that we do get some kind of a downside move in the short term, because right now we need to rattle the cage of these volatility futures. Right now we're barely getting any kind of a move. Okay, 7.7% move, but still, seriously, I mean, it's barely alive right now. So volatility, we've still got this issue right now where realized volatility is still outrunning implied. So I'll finish on this today. So we're still getting this, the orange line here is the realized, or some call it historical volatility, but we're still into these big zones, much more than I've seen it for a long time, where the realized volatility is outrunning the implied. So we're just not getting the fear and the forward movement priced into the options. So what I'm hoping is that we do get a quick shock here that undercuts these lows and really gets implied volatility jacked up again, so we can get back into the selling business, at least for the next few months, regardless of which way this market ends up resolving, to the upside or to the downside. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.